Hello and welcome again to Stocks Advisor. Today we will talk about Pinterest Incorporated, traded at New York Stock Exchange, ticker name PINS. Well, immediately that catches your eye is the fact that we are now almost almost minus 10%, more precisely 9.90%. You see it's changing minus 9.87 after hours, which is of course based on earning reports disclosure, and it's declining. So market doesn't like what they see, and this is actually quite pity because kind of a triangle formation that was seen here and that many traders were hoping to trade with is now broken, especially the lower part of it, which is really pity. And if you magnify a little bit here just to see it, it's really pity because now we are just at 69.78, so we are below it, and now it looks like that actually a converging triangle might turn into at least broken behavior, and we could go all the way to moving average, actually 200, but in the most severe case, let's say. Also, what is possible, it might be recovery forming a red-white candle, meaning that we start lower and then still through the day we will be positively trading. We will see. For a company with market capitalization around 50 billions, this is of course huge loss after hours, like 5 billions in market cap. It's quite a lot. So we will see how it will be traded. But of course, still what is important to remember that the level of 70 is very principal one, because it was formed long term ago, and it's there from December. Slightly the price started to volatile around it, but it was really very strong. So that means that anything lower it would be really nice buy opportunity. Therefore our first buy option will be just between, which would be 62.53 and the top will be 70, meaning that it's immediately active channel to buy. Not that you buy on the top, but you can buy through it, and this will be immediately open channel to buy in once there is an, let's say, opening. And if it really rebounces till the top of this triangle, let's call this line R1, it's really advised to sell there, because most probably then we will go again into decline all the way to the lower part of the triangle, which is the line, let's call it R2. So if we do tomorrow, let's say red white candle, then just sell in the vicinity of R1, which will allow you to make up to 10-15%, and that will be within our general profit taking advice. So if you're a daily trader, we advise you here to take profit from 10, more closer to 10, let's say, but even maybe 15 will be possible there to make. And once you can do it, just take it, re-enter, because overall looks like we are going through the times of some decline with waving, of course, but if you catch that wave north, take it, and then let's see how it will behave lower. Speaking of MACD, most probably with this news we will start second negative wave, so the pattern could be similar to the one that was formed in March here, meaning that it could go a bit lower. Therefore this would be the first channel to buy. Still, what is possible here, of course, after breaking this converging triangle formation, we could go lower levels and go even lower than moving average 200, which will make for us again next very nice buy opportunity according to the chart. So this is the trading levels that we could buy through again. This of course should be very severe decline for the company, but this technically is still possible, and therefore we just need to keep some funds to buy there through. And as a part of our mixed analysis, where we do discuss risk mitigation due to technical breakage and also due to negative catalyst, we just need to keep some funds to buy there. So let's make it as another call out for us. So 48.56 to 53.70. This will be the second channel to buy. And actually the first one we also didn't write here, which will be between 62.53 and 70. So let's write it as well. To 53 to 70. This will be the first channel to buy if we have just a quick gain here tomorrow, and we will recover back. So these are two channels based on technical. Let's say the most expected is first one, the least expected and more dramatic is the second one. Still, what we need to keep in mind, especially knowing how much the price could decline just after hours, We need to, let's say, mitigate some risks due to catalyst kicking in, and negative catalyst means that if there is any bad news, the price could go really, really low. And here we can see that actually the stock was really growing much in the 1 year period. You can see that actually from the period of April of previous year, it was forming really, really beautiful growth channel. But now we are in kind of consolidation waving, and if any bad news comes after this earning report, we might go a bit lower here. So therefore, we just need to keep some funds to buy through this very principal channel that was formed by August, October. And now let's magnify it back. So this would mean that we need to keep some funds. Again, it's not we say it's going there, it's just to mitigate risks if it's going, if there is a doomsday effect of scenario. We just buy between 32.66 and 38.78. So just keep some funds there. Believe me, it's always nice to keep some for averaging down at the principal levels, because then you know that you will exit with the plus at the end of the game, and in the worst case scenario you will just exit with a draw, which is still okay. So you won't lose any majority amount of money here on this kind of trading strategy. So this will be the third level to mitigate risks due to negative catalysts coming in, if any. So this way it will be the best optimization for profit versus loss for pins. And overall, of course, most expected level is the first one. Other two are consequently technical and negative catalyst risk mitigation strategies. So it's part of our so-called mixed analysis, where we do 3 in 1. So it's technical situation recognition, which we saw as a triangle. Then it's a non-linear averaging down and actually risk mitigations. And speaking of non-linear averaging down, it means that we are going to buy through those channels, of course, not with equal portions, but with an increasing portions. Therefore, here again, very classical. For those who are not first time at our channel, they know what it means. 5 portion play. What does it mean? It means that the funds you would like to play here, you can split actually in 5 portions, and then you can buy with 1 portion through the first channel. If the price declines and we go to the second technical level, then you buy with another 2 portions through the second channel. If there is any negative catalyst kicking in, really doomsday scenario, you just keep another remaining 2 portions to buy through at the lower level and then make your major profit. Because actually with this way of trading, the worse it gets, the more profit you make. It sounds a bit contradicting, but it is indeed like this, because if you do a so-called stop loss analysis, usually what happens if you have bad news, so the worse it gets, the more you lose, because you have to cut your losses and exit. But you gain some time, of course, so you can check other opportunities. In this way of trading, the worse it gets, the more you can make at the end, because you actually buy through non-linearly. Of course, that's not what we want. The most expected trade is the first level, but this is really the way of trading. So the worse the better in this case. So even if it declines, many people will be exiting. You just buy through. What is required from you is just calmly buy, know what you are doing, and really believe into the analysis. If you do this way, at the end you exit with a profit, and in the worst case scenario with the minimum loss. So it's the most oriented for profit making, but in this case you spend a little bit more time, because you just need to wait for those lower levels to come and to buy there through. So this is very interesting way of trading, but I like it personally more, because I don't like seeing, let's say, red colors on my account and thinking, okay, I will do it next time. No, I better wait a couple of days and have it green rather. So with this being said, that's the way of strategy, and actually that's the way to trade with pins. This is so-called trading card. I always keep saying this because it's very important. So this is the trading card, meaning that if you know what is written here, you know what it means. You can just save it, print screen it, or print it out and use it as a guidance to trade with pins for the coming couple of weeks or months, depending how the situation will develop. So with this being said, good luck with this one, and see you at another episodes of Stocks Advisor channel.